Today, we're going to take a deep dive into one of the world's most effective, yet quietest, capital compounders, Constellation Software. Now, if you haven't heard of them, you're not alone, but their performance, well, it's the stuff of legend. Our job today is to figure out exactly how this incredible machine works.
Let's start with a number, 19.7%. Just let that sink in for a moment. That is the compound annual revenue growth Constellation has delivered, like clockwork, for the last 10 years. No flashy headlines, no Silicon Valley hype, just methodical, relentless execution. The question, of course, is, how on earth have they done it?
And before we get into the weeds, our standard disclaimer. Everything we discuss today is for informational purposes only. It does not constitute investment advice. You should always conduct your own thorough due diligence.
All right, here's our game plan. We'll start with the enigma of their success. Then we'll examine the core building block of the whole operation, what I'm calling the VMS Blueprint. After that, we'll see how they've built that into a perpetual motion machine, look at the staggering results over the last decade, and finally, discuss the challenges they face today and the philosophy that guides them.
So, this really is the central mystery, isn't it? How does a company grow to more than $10 billion in revenue, compounding capital at these incredible rates for decades, all while staying almost completely out of the spotlight? To understand this quiet titan, we have to look under the hood.
And to solve that puzzle, you first have to understand the fundamental atom of the entire Constellation universe. It all boils down to a very specific kind of business with incredibly powerful economics, vertical market software, or VMS.
So what exactly is VMS? Well, put simply, it's software that does one thing for one industry and does it perfectly. It's not trying to be everything to everyone. It's purpose-built to solve the messy, complex, and absolutely essential problems of a very specific niche. We're talking software for a library system, or a chain of spas, or a boat dealership.
You see, the contrast here is what matters. We all know horizontal software. Think Microsoft Excel. It's a Swiss Army knife. It's useful for a million things, but it's not a master of any of them. VMS is the opposite. It's the custom-forged key for a very specific lock. It doesn't do 50% of the job, it does 100% of the job. And that creates a powerful moat built on sky-high switching costs.
You know, a former M&A director for the company used what I think is the perfect example. Software for the funeral business. I mean, think about it. It's a unique workflow, it's highly regulated. As he said, Google and SAP are not going to bother building software for funeral directors. The market is just too small and specific for the giants to care about. And that creates this wonderfully protected ecosystem.
Let's really unpack these economics because this is the engine room of the whole model. First, this software is mission critical. The business literally cannot run without it. Second, switching is a complete nightmare. You'd have to migrate all your data, retrain your entire staff. It's just not worth it. And crucially, the cost of the software is a tiny, almost irrelevant line item on the customer's budget, giving the VMS provider enormous pricing power. The result? You get these beautiful, sticky, recurring revenue streams with customers who almost never, ever leave.
Okay, so we have these fantastic little businesses as our building blocks. Now, how did Constellation assemble them into this incredible compounding machine? The answer is a simple yet powerful self-reinforcing flywheel, a strategy designed to acquire these businesses and compound their cash flow, well, forever.
This flywheel is the heart of the strategy. Step 1, buy a great VMS business. Step 2, and this is absolute critical, they leave it alone. They give managers autonomy and hold them accountable. Step 3, all the free cash flow that these businesses generate gets pooled centrally. Step 4, that cash is immediately redeployed to buy another VMS business. And as they do this over and over, their reputation as the best permanent home for these businesses grows, making it easier to do the next deal. And all the while, they maintain an ironclad discipline on the price they pay. Each step just feeds the next. It's brilliant.
The theory is elegant. I think we can all agree. But does it actually work in the real world? Well, let's turn to the scoreboard. The numbers over the last decade are, to put it mildly, astonishing.
I mean, just look at this. In 10 years, revenue grew from about $1.7 billion to over $10 billion. But here's the kicker, the most impressive statistic on this entire page. Earnings per share grew at nearly 19% a year without any shareholder dilution. That means they funded this entire decade of explosive growth using only the cash generated by their own businesses. They didn't issue new shares. Astounding.
So, where did all that growth come from? Well, the data is crystal clear. The vast majority of it, about 17 to 18%, came from acquisitions. The flywheel in action. Organic growth from their existing businesses is actually quite low, just 2 or 3%. This confirms it.
Constellation is not an invention story, it's a capital allocation story.
Now you might look at this and say, hold on, their return on invested capital has come down. And you'd be right. It's dropped from the mid-30s to the low 20s. That's a natural consequence of having to hunt for bigger and bigger deals. But let's be very clear here. A 22.6% return on capital is still operating in the stratosphere. It is an absolutely elite number that proves their capital allocation skill remains world-class.
And that brings us to today, because their very success has created a new set of challenges. As a much, much larger company, Constellation now has to navigate a new era, facing tough questions about growth, technology, and the future of their strategy.
And this is the core challenge. It's the law of large numbers. It is simply much, much harder to find enough acquisitions to meaningfully move the needle on a $10 billion revenue base than it was on a $1 billion base, especially while maintaining those high rates of return.
So how are they adapting? Well, in 3 key ways. First, they're hunting bigger game. They're doing larger deals and accepting slightly lower, though still very attractive, hurdle rates. Second, they're cautiously looking outside of pure VMS into adjacent software markets. And third, they're getting more creative with how they structure deals, using debt strategically to make the numbers work on these larger acquisitions.
And of course, beyond the challenge of size, there's the great technological question of our time: artificial intelligence. For a company whose entire moat is built on specialized code, is AI a fundamental threat that could tear down their barriers to entry? Or is it a massive new opportunity?
You can really look at this from 2 sides. The threat is that AI dramatically lowers the cost of writing software, which could, in theory, allow a startup to build a competing product more easily. But the opportunity, and I find this argument more compelling, is that Constellation's real moat isn't just the code, it's the decades of deep customer relationships and proprietary data. AI becomes a tool they can use to deliver tremendous new value to their already loyal customers.
The founder, Mark Leonard, summed it up perfectly. He acknowledged that it's scary, but he sees a huge opportunity. He said, if they can produce twice as much software with the same number of people, they can deliver incredible value to their customers. In his view, AI is a tool to reinforce their moat, not destroy it.
And that really brings us to the final point. When you analyze the strategy, the numbers, and the challenges, you realize that Constellation's true, enduring competitive advantage isn't a piece of software. It isn't a single acquisition. It's the entire organizational philosophy. It's the secret sauce.
And it all boils down to these core principles. Radical decentralization, which keeps business units small, nimble, and accountable. A buy and hold forever mindset, which makes them the preferred home for founders who care about their legacy. And, most importantly, an owner-operator culture, where managers are incentivized to think and act like long-term owners of the business because their bonuses are tied directly to long-term returns on capital.
So I'll leave you with this final thought. What is Constellation's greatest asset? Is it the portfolio of hundreds of software companies they own? Or is it the unique human and organizational system that they have painstakingly designed to acquire, manage, and compound the value of those businesses forever? I believe the evidence points overwhelmingly to the latter. The system itself is the true masterpiece.